Welcome, welcome, welcome to this month's Deal Clinic Live. Cannot believe it is June. We're on June. We're halfway through the year already. So we've got a full episode for you today, and I am joined with our resident investor, Tim Sanders. So it's so lovely to have Tim back. Welcome, Tim. And today, Tim and I are going to go through a handful of deals that are our top picks of the month. Now, the interesting thing about this is that majority of the agents are all brand new. They're all with us. They've joined us this year. They're within like a 6-month period, which has been amazing, and they're doing great things. Now, before I get into it with Tim, just like to remind you that this will be recorded. The full recording will be on our YouTube channel, Sourcing Investments Limited, in about a week's time. And there will be snippets of this recording going out on our social medias across Facebook, Instagram, and YouTube Shorts as well. As always, there is no silly question, so please do drop your questions into the chat box. Tim and I will be keeping our eye on that for you, and we will be answering those as we go along. If you are watching this on the replay and you have any questions at all, please feel free to email us at admin@sourcinginvestments.co.uk, or you can email myself, bonnie@sourcinginvestments.co.uk. So without further ado, I'm going to come to Tim. We do have some guests on the line actually. So welcome to our live viewers here. We have Craig, Desmond, Jackie, Ewan, Joe, Louis, Salim, and Balindinger. I'm so sorry. I hope I have pronounced your name correctly. So as I mentioned, if you do have any questions at all, please do drop those into the chat box, and Tim and I will address those as we move through the show. So without further ado, I'm excited for this episode, Tim, because we've got some juicy deals, haven't we? Really, that we're going to go through. And as always, Tim will run the deals through his deal sheet to assess how the deal would be if he was going to buy that. So, Tim, anything that you'd love to share before we get into it?
No, well, it's great to be back. So welcome everybody. It's great to see you all again. I've got all my spreadsheets open. I've got uh, all the information. So I will be jumping between all the different tabs. Normally I have a few different screens on the go here. So please bear with me if I'm suddenly looking a little bit like I'm concentrating. I'm finding numbers and I'm finding information. But yeah, some cracking deals this time. So let's get into it and see what we can discover.
Amazing, fantastic. Let's get into it. So we have this is our first deal, Tim, that we're going to go through. So this is actually by J Newell Estates Limited. They have been with us for a few months now. So we've got this here. It's actually based in Kent, freehold detached flat, 4 flats in fact, under 1 freehold. Okay, just flick through some of the images here. As you can see, the apartments or the flats are in good presentation. They're like almost walk-in condition. There are some things that will need to be addressed, but nothing too major, only just cosmetics. So this is actually worth, let me just go through my notes. Bear with me. So this is on the market for 630, which you can see here on this sheet. And the fair market value price is actually £675. Sorry, £675,000. We wish it was £675. £675,000. Okay, and this deal has been negotiated already, and it is still negotiable. So there's already a little bit of fat already, shall we say, up front. Okay, so you've got a little bit of equity built in already. This property generates £3,000 a month. We do have the breakdown of that on a monthly basis per flat for the 4 flats. So that does generate 36,000 for the whole year. So that's the rental income from this property across the year. And that is actually, this is 5.7 gross yield, which is actually very decent in the Kent area. So Tim, what do you have to add to this property? What questions do you have? I do have another image that I can share, which are more images. And I do have, if you just bear with me, I'm going to switch my screen. So I have to stop sharing. I have to stop sharing and reshare a different image. But we do have the floor plans of that as well. So the total GIA on this is 2,305 square foot. And as you can see here, you've got the breakdown of the flat. So this is flat 1 here at the bottom in the peachy color. You have flat 2 in the pinkish tone here on the bottom right, and then flat 3 is the larger of the flats in the grey, and then flat 4 here in the mint is on the left hand side. So that's what we're looking at really from a layout perspective. Do you have anything to add to this, Tim? I'm just going to stop sharing and go back to the original image.
It's a very sizable property, this one, and for London area, getting that yield is that's very good. So London area and surrounding counties, often the purchase price obviously is a lot higher, the rental is higher, but you get a huge amount of capital growth around that area. So this is a very juicy deal that in another couple of years is going to shoot up as well. It's difficult to make. Often it's difficult to make numbers work in London because of the price of the properties. However, because on this one you've got 4 incomes in one, it's only one purchase, it's only one set of legals to start with, then you're saving a lot, and it's only one lot of stamp duty as well, which is great. The brickwork on the outside looks impeccable. I believe this had a new roof. I think there's something that's been done on the roof. I think it would be minor cosmetic changes that you'd want to make, if any, which would be things like slightly new kitchen, extra little updates here and there from general tenant wear. But overall, there's very little cost involved in actually making these cash flowing, because they're already cash flowing, I believe. So we've got flat 1 is currently renting at 725 a month. Flat 2 is renting at 700 a month. Flat 3, 875, and flat 4, 700. And it's currently let to a family member who could stay or move out. They're open to options with that. Which means it's cash flowing from the beginning. You've got 4 sets of income, which means you're protecting yourself if you've got one tenant that moves out. If you've got any void periods, you've still got rental coming in, you've still got money coming in, and the numbers work very nicely. There's a lot of options to do with this in the future, depending on what your plan is. If you need an exit strategy, if you want to keep it for capital growth, if you want to keep some, maybe title split. We'll go into a little bit more detail of that soon. But if you've got the other images that you were mentioning, Bonnie, that'd be great to have a look through those.
Yep, I'll just let me stop sharing this again, and I'll share the other document that is of the other images. So can you see this screen?
Yes.
Amazing.
Yes, we can. Perfect.
Amazing. So this is, we just have a few more images of this property. So as you can see, there are 3 1-beds and there's 1 2-bed flat. As mentioned already, it all comes under one freehold title, and each flat has its own parking space, which is incredibly important in that location. So that is another image of the exterior. It is in extremely good condition. You can see there that the top part has a loft conversion, which would have been the other apartment. And then you've got these images here of the internal space. It's quite a large exterior.
It's great because especially around this side, I imagine there'd be quite a few of the tenants would be commuting to the into London or to the outskirts of London. And so for everyone having their own parking space in London, that's a big thing to be able to have a big drive like that, to get four, five, maybe even six cars in there. That's absolutely spot on. So that's a key thing for me, but that I'd be looking for is the ability for everyone to have their parking space. So
Amazing.
with this, there's a number of different ways that people could look at purchasing. You could purchase outright on a standard mortgage, do very little work to the place, and have a nice return every month. Or you could look at doing a bridge, and you could look to do a little bit of slight maintenance on it, and then refinance a bit of a minor buy, renovate, refinance. Or you could look to title split. Now, title split is when it gets exciting. There's a lot that can be done with title splits. You could keep some of the properties, you could sell some of them on, and you could still make some money back and still make some money every month. So there's options there. If you're looking to do it basically as a bridge, the purchase price 630. You'd need a 25% deposit. Your stamp duty probably for this would come in around 55,000. The sourcing fee for this is looking around 10,000 and around 2,500 for your legals. You could bridge if you let's say you put a 25% deposit down of around 160,000. You could bridge the rest, which would be in the region of 480, 490,000. Do a little bit of work, let's say update a kitchen or two, or you start the process with the title splitting. And then with the title splits, you then get equity in each of the properties, and then you can start selling them on or refinancing them individually to then pay off your bridging loan. So lots of different options with this one. Cash flowing very, very nicely. If, for instance, you were to purchase it completely outright and not have any mortgage, you're with your reserves, with your letting agent fees, you're looking at about £2,250 a month cash, which is very nice. If you were purchasing on a 75% mortgage to purchase to start with and keep it as is, you'd be probably looking around the £350, £400 a month. But what you can then do is start your plans to title split and things like that from there. So lots of room to wiggle room here, and lots of options as in exit strategies and what you would like to do.
Amazing. I love
So
that. Thank you so much for the breakdown, Tim. We do have a question from Vasca. He's asked, when you were mentioning about the mortgage, he's asked, would that be commercial or residential for the block of flats?
it would probably depend on how you're purchasing. So if you're purchasing with your limited company, I would very much imagine it would be a commercial mortgage. If you're purchasing under your own name, it's very, very doable to have a residential mortgage with that as well. I'm by no means a mortgage expert. That would be where we would need Bruce's input with this. But either one is doable. My preference would be to do this under a company and do this under a commercial mortgage, especially if looking at bridging.
Fantastic. Love it. Thank you so much. I hope that answers your question, Vasca. Okay, so I need to stop sharing and go back to the portal. And what we're going to do before we go into the next deal, Tim, I just want to share. This is J Newell Estates. And as I mentioned, they've been with us since February. And so there is a wealth of deals that they have here. This is just 6 of their 18 that they've got on their virtual estate agency window already. And what I'll do is I will drop the link for our live viewers into the chat box. So feel free to connect with Mr. Newell and to ask any questions specifically about those deals, about that deal or any other deals that you see in his virtual estate agency window. Okay, so no other questions. So I think we can move on to the next deal. So this is as everyone can see, an off-market BRRR strategy where there is an uplift of £22,500 profit. So this property is actually in Middlesbrough. We don't have any internal images, but we do have the exterior photograph. Now, as I move through, you can see here that the purchase price is 85,000. and it already rents out at, or should I say, there is a slight refurb that needs to be done here, and it's for damp proofing. And you can see here that the refurb is 17,500, but with the uplift that that refurb will give, that's where that will generate the £22,500. So the monthly rental income is 800 a month, and after outgoings, it actually nets at 534. So it gives you a net profit of 6,408 pounds annually. So that's a gross yield of 11.3. So Tim, it's got here that it's a low risk. Unlike SAs and HMOs, it offers a higher than anticipated rental income, and just says that it's got a long term income stream because there is an existing tenant in there. So actually, it eliminates the potential of voids. There is, as I mentioned, there is the slight refurb that needs to be done, but with that, will give you a great uplift. And Middlesbrough, just for those that aren't aware, because sometimes the smaller cities, the smaller towns aren't known to our overseas investors either. But Middlesbrough is actually a very great. It's a very good area to invest into, especially for investors and first-time buyers. So you've got a low entry price point, and then you've got high yields. So typically you could find a property within the 60,000 to 90,000 pound price bracket. And from there, you'll be able to do buy to lets, or you'll be able to flip as well for added value, and increase in profit. So there is a lot of investment going into Middlesbrough at the moment, which I won't go into here because I want to hear, Tim, what you've got to mention about the figures here and how you would. But the Teesside does have a huge student community, so there is the potential from benefiting from the student market as well. So Tim, over to you.
Yeah, this one's a completely opposite end of the spectrum to the flats that we've just spoken about. Middlesbrough area is a great. It's in the more industrial part of the UK, up in the north. I've got some flats and little houses not too far from here, and it's definitely the blue collar worker area. What I really like about this is the two options of the fact that there's a long term tenant in already. So I presume what's happened here is that the tenant wants to stay. The tenant likes the area, but there are a few issues that need sorting. So damp proofing is something that scares a lot of people off, but if done properly, it's a very good way to increase the value and reduce and sort the issues. So I personally have done a load of damp proof work on one of my flats up in Scotland, and the work that needs doing on this one is not too dissimilar to doing that. So basically it's sorting out parts of the roof, so probably a couple of cracked tiles. There's a couple of cracked tiles, there's been a little bit of water ingress, so then it will be just refreshing up any little bits of damp wood that are there, replastering throughout, so there's probably some damp issues that have seeped through the ceiling, painting, maybe sorting a couple of floorboards out, things like that, doing the flashing. So the flashing on the roof is the areas around the chimney stacks, the areas around the top of the windows where you've got, let's say, code 5 lead, which is 20-year lead guaranteed, so you got your lead protection around, and all that is actually very doable. And what's nice about this is it's got its own garden, so if they need to put up scaffolding and they need to put up any kind of drop zone prevention, you're not on the street, so you don't have to get permits to have scaffolding on the walkways or on the street. You would do it in their own garden, which is half the issue that I've come across in the past needing to get damp proofing done, is having to have permits to have scaffolding on streets, which is where I've managed to get round, but it does create its own issues. So here the renovation is probably around about the 17,000 mark, which I think is accurate. I think that's right, and it can be done pretty quickly. So it's nice. It's a lot of cosmetic inside. So redoing, let's say, taking some plaster back where you've had some water ingress, probably in the top corners of the cracks, replastering, repairing any kind of the underlying wood, and then painting over again. So that in itself is a fairly easy fix to do a flip. So if the tenant was in there, the tenant would be happy to have the work done. Most of it would be on the outside to start with, and then maybe a room at a time while the tenant's in. I'm sure reducing the rent just for a couple of weeks for the inconvenience. Then there'll be a very happy long-term tenant with the issues fixed. So you could then either sell it on with a nice profit as a flip with a tenant in situ, or you could look to refinance at that point, and with a nice big 22,000 profit, the refinance numbers are very juicy. So if I was purchasing at 85,000, if I was spending 17 and a half on the refurb, and then the end value would be looking at 125. A 75% mortgage would get with an £800 a month rental would give me a cash flow of just shy of £250 a month, which is pretty healthy, giving a ROI for me personally in my spreadsheet of over 16%, which is great. That's a really nice, healthy ROI, and it's you've got a bit of room there. Also, if I was looking to flip, once I take in all the costs, I could probably make about 15,000 profit on the flip at the back end, which isn't massive, but again, it's healthy. It's two very healthy exits. So you can then decide what you want to do if your circumstances change. So for me, I like this. It goes a long way. It's got a lot of things going for it, where the smaller issues that you don't necessarily think about when you're purchasing are pretty much covered here by the fact that you're not on the street, which helps a lot. And that's helpful in terms of getting rid of rubble. If you need a skip, you've got an easy access to put a skip there without causing too many issues for the neighbours around. So for me, this is a very nice one, and a low entry point as well. 85,000 as an entry point is a great starting area for that. So for me, I like it.
Amazing. And thank you so much for sharing the insights there with the damp proofing. I would not have ever thought about the importance of having your own garden just to get
It
that.
it really does help. It's very helpful. If you're working on the street and you're having to do damp proofing in the street, it's doable. It's not a problem, but you do have to go through the process of getting permits to have scaffolding on the street, which does take an extra couple of weeks. So you eliminate that risk here.
Okay, great stuff. Thank you so much. So I'm just going to share this agent's window. So this is Courtney. So Courtney has been with us for a few months, and you can see here that she's got a handful of deals already in her estate agency window. So what I will do is, I will add her link. Oh, good Lord. I've just deleted one second. One second. That's my tech abilities. Let's come out of that and go back in. There we go. And I will add that to the chat box. So if you do want to reach out to Courtney, please feel free to do so. That is her link there. So, Tim, we don't have any questions with regards to Courtney. So thank you so much for the breakdown of that. I think it's very smooth, understandable strategy. We now have this.
Actually, just one thing that I didn't mention,
Yeah.
which I've just looked at my sheets again. For me, if I was to buy this, do the renovations, and then refinance afterwards at the increased value, it would give me only 17,000 left in the deal. So that means with the refinance and the increased value, even after all the refurb costs, it's only cost me 17,000. So actually, it's basically getting a house for free, because you get all your money back from the purchase, and I would have just spent the 17,500 on the renovation costs. So for me, looking at my criteria, I like the slightly smaller places like this, the slightly lower end. That's a very nice sum to be able to take out of the deal. So having the capital there to start with to put down. Personally, what I would do it cash. So I would put down the 85,000 cash, and I would use maybe a small bridging loan on the renovation costs. I would then refinance, pay all that back, and it's only taken 17,500 of mine. Or I would have maybe another investor that I would use for the refurb costs, and do a joint deal that way. So I like the fact that there's a number of ways that you can do this, which for me it's nice.
Okay, that's fantastic. Thank you so much for giving us that insight as well. Just want to address a question. Vasquez asked, are all the sourcing investments, property deals, sources or agents pre-vetted in terms of ICO registration, etc.? Or do we as investors need to check them before investing in a property deal? I can confidently say, Vasquez, that all of our agents are registered with all the regulatory bodies. It's something that we require before we actually allow them into the space. It's one of our plus points of many. Okay, so let's move on to the next deal. So this is an interesting deal, Tim, because this is actually with a brand new agent. He's, as you can see, they've been with us for 1 month. This is a big deal that they've actually acquired. So this is a student investment. It's off plan. Okay, so this is, I think this is the first time we've ever had an off plan deal, definitely presented on a Deal Clinic Live. So the way that this is structured is very interesting, and I actually like it. And I'd like to hear more about it from yourself. So you can see that it's a student investment. And you can see from the brochure for the viewers, it's actually a student apartment within a campus in Bradford. And it's what's on sale is a one bedroom, one bathroom apartment. Now they are, it says year built is 2025. They are due to complete in approximately 18 to 24 months. That's the whole of the project. The purchase price of this property is £65,000. Now the fair market value has been estimated at 81. And the way that this has been structured is actually, I'm really intrigued because the down payment is 6,500, leaving 58,500 left to pay. But that can be paid as a monthly instalment of £1,200 across 4 years. Okay. During that time, they can also receive the rental income, which is £433.33, which can either be put towards the payment of the 1,200, or they can take that, whichever. They can offset it or not. It's up to them. But all the management fees have been factored in. So, Tim, what are your thoughts on this?
This one is I actually, as you say, you don't come across many off plan on the platform, and it's very interesting for me because currently I'm based in Dubai, and Dubai has a huge amount of off plan properties here because of the growth of the city, and they work in a very similar way where you put a down payment at the start. And then you pay systematically over a couple of years, and then you pay a final payment on completion. So you don't need a huge amount of cash to start with. You've got a huge amount of opportunity. You're updated on how things work. Yes, there's a slight risk with off plan that things do get delayed. So you probably would want to factor in the fact that maybe a couple of months delay in the building because you never quite know what's going on. But it's very nice that you've got simple payments every month, which is easily doable. So the way I would approach this is that I would use the rental profit from the rest of my portfolio to pay the down payments every month. So what's the word? What's the term I'm looking at? I would pay the 6,500 to start with out of my own pocket. The value then is 58,500 to pay, and I would then use the profit every month would then go in to the monthly payments, and then basically I'm getting a flat for £6,500, which for me is it's a no-brainer. It's a no-brainer on that part. So if I look a little closer at the numbers, the it's great. So the rental is quite low, 433. It is students, so you're not going to get massive rent for individual properties. Students, there's no need to get a mortgage on this one because you're doing simple monthly payments. Or instead of putting into an ISA account every month, you would put money into this for the down payment each month. You've got it'll be taken off at the end, and the fact that it is worth about 81,000 afterwards gives a huge amount of potential to refinance and basically get a load of money back. You're looking at an almost infinite return on investment if you were to refinance at the 81,000 mark. Your monthly cash flow would just tip over on my stress test. So my monthly cash flow, once I take into account letting fees, mortgage payments and operating expenses, is just on the £100 a month, which is where I put my stress test. For me, I don't take anything that gives less than £100 cash flow a month. And then that would basically give me all my money back because of the uplift. And my true ROI would be 64.5%. And then the net, which is basically the purchase plus any more remortgage cost, is an infinite return. So the numbers are very, very nice that you don't need money to go in. And whereas it's Bradford's on the outskirts of Leeds, so it's a nice sought after area. It's a huge student population around there. You've got a number of different universities around there. Yes, this is specific within Bradford, but it's a very sought after area for students to go. So for me, it's very, as you said, very interesting and very low risk in terms of the fact that you're not putting a huge amount of money down that you would lose.
Mm.
So yeah, it's good. Students, you do have to be a little bit careful, but for the fact that it's in a particular block, means that it will be managed and will be kept on top of. So, from that respect, I'd much rather have that. And because it's a studio apartment, you're not going to get an HMO where you've got 4 or 5 rowdy students throwing parties and things like that. You've probably got a young couple or maybe even a young family while they study, which means you're going to have few damages. Yeah, I like it. I like it.
Amazing. I love that. I love that. And thank you for sharing the your concept with regards to, or your thoughts and ideas around using the profits from your other income generating units from your portfolio to actually pay towards the monthly installments, which means in effect you are receiving something for not quite free, but almost free. Six and a half.
Exactly. And it's about not necessarily being, well, I suppose being creative. There's many different ways to be able to, because the monthly payments are doable. They're a standard rental, basically a standard rental price. That if even if you've got your own place that you're mortgage free on, you can then start putting the money away every month and building it, which means you don't have to wait 2 or 3 years to save. You can get in now, and the prices are only going to go up. Same as here in Dubai, the prices are only going to go up. So it's a very very doable investment for
Mhm.
people that don't have a lot of spare cash.
I love that. I love that. So let me go to, yeah, we've never had one like that before. So this is Vesta Incorporated. So this is their first deal. As I said, they've only been with us for just under a month. So I will share their details in the chat box. But as mentioned, this deal has been quite unique, especially for Deal Clinic Live. We've got a question in the chat. Bear with me 1 second.
So I can see from Beska, you've mentioned it makes a lot of sense since the developer gets regular payments, which presumably helps smooth out the cash flow in terms of building and the contractors for future projects. Exactly, and that's exactly how they structure things here in Dubai. They get the down payments, they get the installments done normally quarterly. So normally every 4 months you would put down another installment, and that covers the building costs for them to keep going, and then they only make the profit at the end when you put the final balance when everything's completed at the end. So yeah, it's a very commonly done thing over here, and so far from what I've seen of it, it's pretty solid. The regulatory way that they structure it here with the government, people are very much protected, and because it's a student area, this will be completed because the funding is coming from the government that's been given to the contractors. So yeah, it's a very very good way to structure it. And I've seen Kay mention here, isn't it hard to use student flats as security for future investments? Are the lenders favourable towards these? Honestly, that would be more of a question for Bruce. I wouldn't be able to answer that too much. I haven't had any issues with student flats and finding lenders for, not that I have any, but people that I've worked with haven't had issues. I think the good thing with this one is because it's a studio and it's going to attract smaller families or young people, young couples, rather than an HMO. I don't think the lenders would have as much of an issue. However, I'm afraid I don't know the real answer to that. I don't know if Bonnie's got any other insights.
I don't have any other insights into that one, I'll be honest. And I think it would be best for Kay to reach out to Bruce Bond Finance or any of our financial and lending team. They would be the best to know about that. But I know I have known people in the past that have invested in student accommodation, shall we just call it that, and they haven't seemed to have any issues. But it's always best to check with the experts, Kay. So I hope that helps. Um, Okay, so then Tim, we're going to move on to the last one. Now, this actually isn't a brand new agent. They've actually been with us for several years. But Property Investment Complete we've done many deals with them. And in fact, they've been solid agents on the platform and have actually we've had them on Deal Clinic Live a couple of times, and they've sold a couple of their deals from the show, as well as others. So I want to talk about this, Tim, because they're not one of our newbies. They're one of our solid agents that have been going for years, and they have this turnkey 5-bed HMO, which is close to a hospital. And so if I just go through the pictures here, you can see that it's in a good condition, and might be a little bit untidy, but that's living properties, right? But it's in good condition, which is important. And so you've got that. You can see that it's got a lot of space inside and outside. You've got the fact that it's close to a hospital. It's 180,000, based in Sheffield. So we know that Sheffield is an affluent area as well. Now, this property is actually off market. The price is negotiable, but it already yields 2,565 per month. So your gross yield is over 14%. So Tim, this is a 5-bed HMO based in I've just seen there, Mexborough in Sheffield. So what are your thoughts on this one?
This one, for me, it's simple. It's a very nice, simple one. My brain goes straight to nurses as the clientele, as the tenant. It's right next to the hospital. I've got two little flats up in Scotland that's right next to a hospital, and my tenants are nurses, either nurses on placements or student nurses, or I've got one of them that's been a long-standing nurse that's been in one of my flats for 5 years. Absolutely solid. Their nurses are hard workers. They need a place to stay. They're conscientious people. They're caring people. You rarely have issues with nurses. So that would be where my brain goes for the tenant type. What I like about this is it's very straightforward. It's already cash flowing, so it would just be a case of getting a mortgage from the get-go. If it's 180,000, 75% mortgage would be 135,000. There would be no issues getting the mortgage because it's already generating over 2,500 a month, which is a very healthy number. Taking into account my mortgage rates, my letting fees, and operating expenses, that would give me a nice cash flow of just over £1,400 a month, which again is beautiful. No qualms about that. It's a nice healthy profit. So, I mean, for instance, this would be a classic example of the rental that you could put into buying an off-plan property, such as the one up in Bradford, where the rental's enough, your profit's enough every month that you can then put it into something else and grow. So for me, very nice. It's a lot of space outside, so you would need to make sure people are keeping on top of cutting the grass, making sure that the garden's kept up. And yeah, not really much more to add on that, apart from so far in my experience, nurses have been one of the most secure and hassle-free tenant types that I've had.
Amazing, love that. And as you mentioned, because the hospital is close by, the nurses will be with the shift patterns that they work, it will be just so convenient. So I can imagine voids are minimal, to say the
Yeah,
least.
and also, again, my experience is that if someone moves on, they have the network within themselves to say, right, I've got a friend coming, my replacement needs a place to stay. Can she just take over my room? Can she just take over where I live? So again, my experience is it's been very easy to replace the tenants. I've not had to advertise. I've not had void periods. It's a simple case of as one's leaving, someone else is replacing them. And if it is a house full of nurses that live together, you've got a nice big network of people within the departments where they'll know people that want to be able to rent. And being so close as well, 5 minutes walk. I mean, it's perfect, right?
Is perfect. It is perfect. So I'll just share. This is PICNW's page here. These are their other properties that they have in at the moment. So you can see they're one page of. We've got 2 pages of properties, but that's that one there that we've just looked at here. But you can see that they've got other HMOs in their window as well. Won't go through all of them, but let me just share their link as well in the chat box.
I can see a question in the chat box, which is, do we know why the vendor's selling?
I don't actually know that, but you are able to. I'm going to put the link to PICNW's window. Please feel free to reach out to them and ask them that directly. They will definitely be able to help you. Um, so those are all the questions today, Tim. It's been great to have you back on board. I'm just going to stop sharing because at the moment I can see a little box image of you. Ah, it's too funny. But it's been lovely having you back with us. I know that you're over there in the very warm Dubai. Um,
Very warm at the moment. It's getting hot.
It's getting hot. That's what it's also getting warm here in the UK as well. So I feel like we're in for a good summer. So I want to thank you again, Tim, for joining me. It's always good to have you back as my co-presenter. I do enjoy having you host the show with me. And I want to thank our viewers today. So we have a plethora of viewers. So it's lovely to have you here live with us. We have Anil. Um, Balinginder, I hope I've pronounced your name correctly. Craig, Daniel, Desmond, Ewan, Jackie, Kay, Kenneth, Louis, Panina, is that right? Salim, Sammy, Vasca, and any Edicida. I hope I've pronounced your name correctly. Um, with that, I want to thank you. And for all our viewers that watch on the replay, the YouTube channel will have this episode in about a week's time. So with that, I thank you for your time and for joining us here. And we look forward to seeing you again on the next episode in July. Okay. And take care. Thank you so much. Bye for now.